Okay, so
Good morning.
Good morning, Mike. Good morning, Specky. Good morning, Tony. Morning, Gladys. Good morning, Masharia. It's wonderful to have you this morning. Wonderful. Pauline, over to you. So welcome, everyone. Welcome to this session. In a short while, we'll just be having just our opening videos playing, but it's great to have each one of you here. What do you, Pauline?
All right.
So as my colleague gets that organized, just catch my attention when you have it, Pauline. Welcome everyone. It's great that we could have you here, and thank you for coming in on time. We have some wonderful things lined up for you today. My name is David Osijeni, and I'm honored and really grateful to be your host this wonderful Nairobi morning. Now I know here in Nairobi it's morning, but maybe you can just type in the chat and just let us know where you're joining us from. Just type in the chat, let us know where you're joining us from and what time of day it is where you are. I know we have Nairobi, we have Uganda. I don't know if there's anyone else joining us from somewhere else. So just to be cognizant of that, just type in the chat, let us know where you might be joining us from in case you're not in Nairobi. Nairobi is chilly this morning. The clouds are up and quite gray, but it's not as cold as it has been the last few months, and it's just great to be here. Again, for those that are just joining us, I'm David Osijeni. I'm your host for today, and today our conversation is really around a deep dive into the investor's mind. In a very short while, we'll be playing some videos for you just as we begin this session. If you see someone that maybe you recognize in the session this morning, just type in the chat, give them a shout out. Just let them know you acknowledge their presence here. Also, if you're joining us from anywhere other than Nairobi or Kenya or Uganda, well, if you're joining us anywhere other than Nairobi, because we are hosting from Nairobi. Well, I'm hosting from Kiambu, but we are hosting from Nairobi, and it's wonderful to be here. So we're just going to play some videos. In the meantime, in the chat, just let us know where you're joining us from, and then we will carry on from there. Over to you, Pauline.
TBN is really about three things. We are about capacity building, we are about community, and then capital raising. So we take our entrepreneurs through a 6-month program, and our promise to them is that if your biggest requirement is capital, we'll actually raise it for you. But beyond raising the capital, beyond the training, we also think belonging to a bigger community of entrepreneurs, values-driven entrepreneurs, is really important, because we've seen collaborations come out of that. We have seen businesses influence each other for good.
Each one of you is here today because at a certain point, whether it was Manraj or Purity or myself or someone else, somebody said something to you and it resonated with where you are. That's the unique value proposition, because there is anywhere else you could have been, but you connected here because it resonated with you. Look into your background and look at the kind of clients that you've served so far. Look at the kind of business that you've done this far. When you look in detail, you'll begin to identify certain unique things that only you can supply. That's your unfair advantage. So they went through the 6-month program we call Business Continuity and Recovery a few months back. And so we just want to celebrate them like that.
It's a very good program, especially for someone who is also looking into funding, because then it prepares you to be ready for the people who may want to invest in your business. Because they help you to come up with the processes, and that's one of the things I've also enjoyed a lot in the program. We've been able to actually document all our processes. We now have standard operating procedures. We're doing financial audits, and these are some of the things for someone who is looking at scaling up that even investors would want to see. And so it's a great opportunity, even joining the TBN program and being able to be ready to scale up.
Yes, so someone who's looking to have a strong business or scale their business, they need to join a program like TBN so that they can get mentorship and business skills. And I would also advise them to look into their finances, that's the cash flows and the revenues. And the good thing is TBN gives us all these resources in form of the classes, and it gives you materials that you can actually use in your business for you to be able to see if it's the right time to scale your business, and if it is, how to go about it. So I would advise them to join TBN for that.
Through the coaching, I was able to set up a place where now we're able to stock, and this has helped to reduce our turnaround time for our services, which means our clients are more satisfied. But these are all things probably I didn't think were important, but through the coaching sessions, I've been able to do that.
TBN gave me a roadmap. I never feel lost anymore. Gave me a family, a sense of belonging. So I built my capacity, and that motivated me. Then at TBN, we have a very good support system. The TBN team is available for any consultation at whatever time. And they have the goodwill. They want nothing but the best for our businesses. That makes me feel very good that I came to TBN.
We took it in 2017. And at that point, we were at a place where we felt we really need to add proper structures in the way the company operates. And really that was the objective behind joining TBN.
The experience has been exceptional. So far, the experience has been exceptional. Mind-opening, and just like the name suggests, transformational. And honestly speaking, for me, it has actually been, my experience has been nothing short of transformational, bordering on a miracle, just there.
You see, the good thing about joining a program like this, you're learning from people who are experts in the area. Number two, you're also learning from your peers, because they are also talking about their own challenges, what's working, what's not. And then so, there's that sharing. And then there's also just realizing that you're not alone with all your problems. Everybody else is probably going through the same thing with you. So it helps you as an entrepreneur to just have the grit to continue, because entrepreneurship is very difficult.
It's amazing how entrepreneurs will share ideas and share opportunities with each other. And we've seen that not just for this graduating class, but for the community, the alumni community. We have an alumni community of over 200 entrepreneurs, and we've seen so much collaboration come out of that. And that for us is what TBN is about, that we are creating a community of values-based entrepreneurs that are passionate about using business for good, that are using business to change the fortunes of our country and our continent.
The way the wise Chinese proverb says that the best time to plant a tree was yesterday, the next best time is today. So anyone who is thinking about doing it, just do it. It's absolutely worth it. It's absolutely worthwhile. It's a need for any business. This is a booster shot. And we know about shots. Yeah, this is a very good booster shot. I'd highly recommend it to anyone to do it now.
Wow. It is about shots, and we know about shots. Welcome, everyone. It's wonderful to see each and every one of you. David Osijanyi is my name, and I'm really honored to be hosting today's session. It would be wonderful if we could just see your faces briefly and just wave even as we start today's session, just so that I know I'm not just talking to I've not just been put on hold. So just put on your videos if you can, just wave briefly. It's just wonderful to see each and every one of you. Great. Thank you so much. Wonderful. I can see many of us haven't changed much since the last time we saw you, and it's wonderful as we begin today's session. Thank you for honoring our invite today, and thank you for being here. We really appreciate that you took your time to be here, and we intend to use that time very well. We intend to use it properly. Thank you so much. I can see quite a number of us have put our names and where we are coming from. If you haven't introduced yourself in the chat, and part of this was really so that we know who is here, but also just so that people can know who else is here. And you never know, this is of our networking activities, and just it's good to see you. I can see Elijah from Connect Initiatives joining from Kampala, Uganda, just to mention a few. I can see Robin from Sumel Organics Agritech. I can see, just to mention some of the people that I'm seeing here, Dorothy Pillars of Women Network, Gladys from Nakuru, Kuresoi, and I can see someone here from Kamega is Chris Amutabi, Librium. Wow, some of the names. I can see Megan from Zana, Africa. Megan, it's good to see you. It's been a while, and looking wonderful to reconnect in this space. So if you haven't introduced yourself, please just type in the chat who you are, your business name. Somebody here might be looking for you. Leah Karangi of Fire Chili, it's wonderful to see you. Mirotsi Nyumbani online. Joy from Okeo, Mbeya and Mukohi Advocates, and Ishita from India. It's wonderful to have each and every one of you. Today, we bring you together to just have a conversation and really have a dive into the investor's mind. And that's the title of our session today. And we have lined up some great conversations from some investors. Just share with us, how does the investor think? And maybe first thing I would want us to maybe share here, even as we prepare to just get an intro from the Regional Director, Transformational Business Africa, is maybe just type in the chat. When you think investment, okay, when you think investment, what are some of the greatest fears that come to your mind? When you think investment, what are some of the greatest fears that come to your mind? And maybe we can just type this in the chat very quickly. When you think investment, what are some of the great fears that come into your mind? Or what are some of the fears that come to your mind as a business owner, as an entrepreneur? Anytime you hear investment, what goes through your mind, and what are some of the fears that are elicited by that name, by that title, by that conversation about investment? So I'm looking in the chat right now just to see if there are any thoughts coming up, if there are any ideas coming up. So I'm just seeing people giving their names there. So I'm seeing someone typing in, when you hear investment, you think interest rates. I thank Irene for that. Ishita says security of money. Let's see some more coming up. When you think investment, what comes to mind? Ishita again, ROI, return on investment. When you think investment, or when you hear you're going to have an investment conversation, or like TBN, we are currently talking a lot about investment. What are you thinking about? And someone says youth for Life Trees says, how long is the business? Matthew and Jiro says, where to get the money required? Tony Chen says, alignment of values. Thank you so much. Keep them coming. Mike says, viability. Wonderful. Megan says, fears, getting bad funds, others not honoring your intention and driving the business into the ground. Waste of time. No one investing despite huge investment of our time because we aren't in the agriculture, fintech, other easy fund silos. Thank you so much for that, Megan. I can feel your pain and your fears as well. Irene says, investors wanting to change my plan to what they want. Lucy talking about capital injection and viability. Amazing, amazing conversation that you can feel free to keep typing this. Now, as a community and as a network, we have been asking ourselves, how do we help businesses move forward? And one of the persons who is a champion of SMEs, is a champion of growing businesses, and is constantly looking for ways to move businesses forward, is none other than the regional director, an entrepreneur himself in the logistics space, seasoned logistician, but also a seasoned business leader. He's been running TBN Africa now for a while, seen it through difficult times, deep times, low times, high times, good times. And the ladies and gentlemen, let's put our hands together and just welcome Jacob Zikusoka as he gives us a brief introduction and welcome. Over to you, Mr. Zik.
Thank you, David. That was those are high accolades. I was looking behind my back to see who you're talking about, and then realized, you mentioned my name. But thank you, and everyone, thank you for making the time. We know you squeezed time out of your busy schedule to be with the community this morning, so we really appreciate that. And for our speakers, thank you so much for always being available at almost short notice many times to engage with us. Like we've always said, as much as you can get is what you benefit from these talks, these conversations. It's really about engaging. It's really about committing to seeing through your journey as an entrepreneur. The community will support you in every way. Over the next so many months, over the next couple of years, you're going to see a lot more investment coming into the region, into Kenya, into Uganda. So you need to get yourself ready. If investment is your need, if capital is your need, you need to get your house in order. And so these talks that we're having are helping towards that goal, towards that, towards trying to get all of us aligned towards, that expectation. So welcome today. Good to see you beyond this gathering. We are available to help you make the connection. We are available to help in any way we can, because that's what we're here for. So thank you so much, and have a great morning with us and a great day ahead.
Thank you so much. Thank you so much, Jacob. And of course, we feel your passion, and we have seen the work that you've done. We are really excited that you could join us this morning to open session. Now, like I mentioned, we have some wonderful conversations lined up for us today. And as we think about this, I'd want you, as you listen to our different speakers, to think about some questions you might have. And as the questions come to mind, feel free to type them in the chat, and we'll be more than glad to capture them. We will address them. We'll do our best to address as many of them as possible. However, if we do not address your question in this session, do not worry, we will definitely draft up a response to you and send it back to you as my colleagues are in the room. Now I can see Irina typed in there, when you talk about investment, investors wanting to change my plan. Lucy said capital injection and viability. Mikhail said knowledge about the investment. Youth for Life Trees again says business plan worth generating revenue. Of course, Becky says how do I ask so that you don't under or overvalue your business. Now, today we've brought into the room two seasoned investors. They've been in the investment space for a while now, represent organizations that have invested in many businesses, and we felt it would be great to have them come and speak to us and just share with us what's normally going on in the mind of an investor when they're sitting across from an entrepreneur, and how can we as business leaders and entrepreneurs prepare ourselves for those conversations? How can we position our businesses for those conversations so that they can be fruitful conversations, so that they can not only, even if they don't turn into money, well, would love that they'll turn into a financial injection, but even if they don't turn into financial injection, how do we come out of those conversations with good information, good learning, and good knowledge? And our first speaker is a gentleman I met sometime in the days of around 2018, and he has been in the investment space for a while. This is just a bit about him. He's a partner at Verdant Frontiers and GP of the Verdant Frontiers FinTech Fund. And he has 25 years experience starting new companies with multiple exits. Now, he co-founded Redica Systems. I can see the English people are getting it. He co-founded Redica Systems, a SaaS business that he led as CEO for 8 years, and is a BS in chemical engineering from Cornell University, has an MBA from Northwest Kellogg School of Management, and he and his family lived in Kenya for 3 years when he had 500 plus office with entrepreneurs and made dozens of investments. That's just how passionate he is about investment. He lives in Chicago with his wife and 2 teenage kids, and this is none other than Tony Chen, the founder of Kinyungu Ventures. Tony, over to you and welcome. Thank you for making time to be here with us. I know it's wee hours of the morning, or is it of the night back at home, but thank you so much that you could join us today. We see your passion. Over to you, Tony.
Thank you, David. Yeah, it is 1:30 in the morning for me today, and so I'm talking to you from my closet so that I don't wake up my family. But yeah, David, I don't know if I should just go right ahead and share my story and some of the thoughts about investing, or right
yes,
here.
Tony, just go right ahead and share your story.
Okay. Well, it's good to be with you all. I think I recognize some of your names and faces from some previous sessions. So just a little bit about me. So I, born and raised here in America, 25 years, basically as a serial entrepreneur. I just love starting businesses. Have had multiple failures, have had a couple exits along the way. And in 2013, my wife and I, we actually just started when we had breakfast with her sister. Her sister told us about a friend who had spent a year in Kajabi. And for me, it was kind of like a lightning bolt strike on me. I remember listening to this story of Kajabi, and my heart was like pounding out of my chest, and I was sweating and I was like shaking, and my my wife couldn't sit straight in her chair. And later that night we got to talking, and we just said, I think we're supposed to spend a season in Kajabi. So we moved the family to Kajabi. My wife is a daktari, so she worked at Kajabi Hospital. I was running a software business, and interestingly enough, the software business really took off once we decided to move to Kenya. So we so and then I was actually running my software business from Kajabi for a year. And then we hired what I would call as a real CEO to take my place. So I've come to learn over the years that I'm good at starting and launching ventures, and then there's other people better at operating and scaling. So I handed over the reins to him and kind of graduated to becoming just the chairman of the board. And I had a lot of time on my hands. And as a guy that loves entrepreneurs, I just started having coffee with entrepreneurs in Nairobi. And actually, one of those coffees was with Zeke, right? That was one of the first people I met in the ecosystem. And 500 coffees later, I mean, I think I've pretty much hit every Java in Nairobi. But yeah, I mean, I met some entrepreneurs I really believed in, and around that same time, the business was doing well, and so we ended up making 25 angel investments in Kenya. And at the time, I didn't really to be honest with you all, I didn't know what I was doing, right? I mean, I'm a 6-time entrepreneur, but really as an investor, it's kind of different being on that side of the table. And so I was learning along the way, made some mistakes, which I'm happy to share about. And maybe I'll just share a few things that I've learned along the way. So, kind of some of the things that I really look for in entrepreneurs. As I had those 500 coffees and I started investing and I made mistakes, there's a few, probably like 6 or 7 core things that I look for in entrepreneurs. The first is purpose-driven and profit-savvy. And this is kind of the idea that what is their core motivation? Are they driven by, what are they actually driven by? And I think that the entrepreneurs that I sort of am drawn to the most are those that are motivated by their purpose. But it's purpose-driven and profit-savvy. So it's having that both and that's really, really hard to find. Most entrepreneurs are probably one or the other. And so when I find this sort of unusual both and purpose-driven and profit-savvy, I think that's a great combination. Secondly, I'm looking for perseverance and pivoting. So I think that in a way, you could say that I would say actually the ideas are easy. Like you and I could walk down the street and we could kind of look around and say, we'd probably come up with several good business ideas. And actually, I don't think that the ideas are that hard. What's hard is execution and being able to execute in this environment where we have lots of barriers to deal with. So perseverance is very important. But on the flip side, so is pivoting. And I don't know if you're familiar with the term pivoting, but it's sort of like turning. If you're going a certain direction, and you're learning something, you have humility to learn from the market, and then you can pivot into like the right spot. So it's kind of the combination of knowing when to just keep going, even when it's hard, but then also knowing and having the humility to learn from the market, to hear what people are saying and saying, this might not be the best way to solve this problem. Maybe I need to come at it at a different way. I've met a few too many founders that they sort of have a solution and they want that they see the problem and they have a proposed solution, and they just think that this proposed solution has to be the way to solve the problem. And very often it's that first proposal or that first proposed solution is not necessarily the best solution. And oftentimes you kind of have to walk around the problem a few times to find the best solution. And maybe sometimes it's not until the third or the fourth try that you find what you're actually looking for. And that's kind of what I'm looking for around pivoting. Third, I'm looking for entrepreneurs that are intentional about building cultures. So I really care about how the entrepreneur thinks about the culture within their organizations, right? So like, if I were to have coffee with one of the employees, and I would say, I would ask them, how would you describe the culture of the company? Like, what would they say? And I think so it's important to be intentional about building kind of a positive and good, healthy culture. And I think part of that includes, how do you handle conflict, right? So when you disagree with your boss or your peer, how does that conflict get worked out? Is there like someone in the room that's just kind of, the big guy who just, says it really loudly and then that's it, right? Or whatever, right? So what kind of culture is it? That's really important. And I'm looking for conflict. In fact, if there's a culture where there's no conflict, that's also a problem to me, because that means some things are not being said, some truths are not being revealed, and some problems are not being surfaced. So I'm looking for conflict, but I'm also looking for healthy conflict. Like, let's disagree with each other in a respectful manner, and then let's have a decision-making process on how to resolve these kinds of things. Also, a couple other things. I tend to look for startups that have at least 2 co-founders. And that's basically because it's just startups are hard. And it's very rare that I find one person that sort of has all the superpowers required to get the startups to where they need to be. So, usually the personalities are a little bit that are needed are also a little bit different. So usually there's someone that's a little bit more externally facing, a little bit more sales facing, business development facing, and then usually there's someone that's more detailed oriented, or whatever. It doesn't have to be exactly that combo, of course, but I just find it hard. I mean, there's just so many things to be done and so many things to be good at that very rarely is that kind of one founder can really do it all. Of course, in small businesses, that's what you have and that's what you have. So that's okay too. And then you can kind of bolster your team around you, which is okay too. A couple other things I just mentioned up here, and I don't want to take too much time. I like to have maybe more Q&A at the end, and I'd love to hear the other investor speak as well. But, I would say that there's a lot of there's a lot of investors that behave badly. I mean, just being honest, like, and I think it's some of the criticism towards investors is fair. Like, I think, but also behind that, so let me try to explain what's going on behind the scenes. Like, if we're really kind of peering in the mind of an investor, the investors also have a lot of different kinds of motivations, right? So some investors are there because they're actually deploying their own capital. So they're making a decision for themselves with their own money. And will this be good for me and my family? Will it make money? Will it be something I'm proud of? Something I can tell my kids, right? That's a little bit different than like an investment director who's working at a fund, and they're really just there to kind of get deals through their investment committee process so that they can get more deals and they can build their track record. There's some fund managers that are out there that are looking for pipeline, and they say they're looking to invest, but actually they don't have any funds to invest, right? They're trying to get pipelines so that they can go back to investors and say, look, here's all these amazing opportunities that we have available in our pipeline, that if you invested with me, then we can invest in these opportunities, right? So I think that sometimes the investors, I've seen some cases where investors have not been completely honest about that, right? They say they might be interested in investing, and then they actually don't have any funds, right? And then there's other investors, I would say, that they're just trying to figure out what actually makes sense to invest in. So I've seen a lot of things so I see some funds come in, they say they're investing in A, they hire a team to invest in A, and then the team goes out to find A, and turns out there's no such thing as A. So then they're like, okay, maybe we should try B. So then now they're turning to B, and sometimes A and B are actually quite different, right? So the team that they've invested, the team that they've built to invest in A is actually not that equipped to invest in B, if that makes sense. So, there's some investors that are kind of relatively new to the market, and they're trying to figure things out. And, I think, at the end of the day, we're all humans, right? Like I would hope and I would wish that these investors would be honest. Like if I don't have funds to invest, I will be honest, right? Like, I will say, I don't have funds. I'm raising funds now, but I'm still interested in your business. And if I get funding, right, like have the proper promises so that you can keep them. So that maybe that's a little bit of a tangent about investors, but I think it's just important to understand like when you meet a certain investor, sometimes they're actually not that clear in what they're looking for. And then in that case, sometimes they have to look at your deal for them to find clarity. And for better or for worse, sometimes that means they're not going to invest in you, right? Or whatever. So, and then so the investors that I would respect the most would be investors that are very clear about what they do invest in and what they don't invest in. What's their ticket size, what's their sector, what's their stage, what are the, kind of the key ingredients they're looking for. And also, like, within the fund, is this like their first investment? Is this their last investment? Are they pretty much completely deployed and they're just kind of looking around and just being honest about like where in that sort of life cycle of the fund that they're in as well. I think that those would be important questions to ask your investor even before you pitch them, so that you can understand what they're looking for and how much clarity they have. Because these investors I sort of saw in some of the comments, some of these investors make you jump through some hoops, and it takes a lot of time. And then at the end of the day, they say no. And sometimes that's just the way the process works, because it's not up to them. It's up to actually their bosses, their investment committee. But so, yeah, so these are some of the realities of, kind of the different motivations and the different stages even that an investor, you might meet an investor on a particular day with different motivations and different stages. So maybe I'll just leave it there, David, and just, happy to talk more with questions and whatnot down the line.
Thank you. Thank you so much, Tony. And I'm really believing there's a number of questions coming in. Now, when you started, I got the impression that you had some 7 core things, but I'm getting the impression you probably said several core things.
That's correct.
Awesome.
Thank you.
Wonderful. Thank you. Thank you very much, Tony, for those insights. And we will be having some questions for you towards the end. And glad to hear that you will stay on to the very end of the session. So wonderful. So if you have any questions for Tony and some of the things he has talked about, let's put them in the chat, and we will address them right after our next speaker comes on. So that was Tony. Next speaker is a gentleman I have had the privilege of working with as well, which is very interesting. And so when I saw him the other day as we were preparing for this, I was like, it's a very small world, and probably one of the interesting spaces to be in this season is just working with businesses, something we all love. And we share passion for businesses. I met him when I was working or running similar sessions actually with another organization. And this gentleman holds a master's degree in business entrepreneurship from Pan-African Christian University here in Kenya. And he worked in the banking industry for over 20 years before joining Business Partners International as the country manager. He has worked with SMEs for most of his banking career and is also well-versed with asset finance and leasing. He also has a passion for leaders, and he shares his thoughts around personal visioning in his spare time. He has worked for NIC Bank, CFC Bank, before its merger with Stanbic, worked with KCB Bank, Commercial Bank of Africa, and shortly with NCBA Bank in Kenya before joining Business Partners. Ladies and gentlemen, put your hands together for Michael Muthengi, who will be speaking to us next, talking about investor's mind from his point of view. Over to you, Michael. I'm struggling with calling you Michael. I think we should just go with Mike.
Thank you, David. Really, really appreciate it. Thank you, TBN, for allowing me to be with us today. Initially, I thought of putting a PowerPoint presentation, but after listening to Tony, I think it would not be a good idea. So I'll just keep my thoughts to myself and keep this going. So
you're a sharp man, Mike.
Thank you. So just to get us started, just to share a little bit about who is Business Partners, just for clarity and to make sure that everyone who has an encounter as Business Partners gets to know about us. Business Partners was started in 1981 in South Africa, and it's been operation since then for over 40 years. However, we've been in Kenya for 15 years. This is our 16th year. And we call ourselves a specialist risk financial, providing customized financial solutions, business premises, sector knowledge, mentorship, and other value-add services, mainly for SMEs. And we're passionate about funding, supporting, and mentoring entrepreneurs. We operate in 7 countries besides inclusive of Kenya. We are in South Africa, we are in Uganda, we are in Rwanda, we are in Zambia, and we are in Namibia. So as you'll see, we're not just a local company, we are across the borders. During our period of existence, we have funded 30, out of all the investments we've done, 34% of those are to women-owned enterprises. And we funded 213 businesses this far. We have so far approved 59 million USD to different entrepreneurs, and we have created over 11,000 jobs during this time in our investments. We are not an investment fund, so our fund will not come to an end. We will always be there because we are a company and the funds belong to our shareholders, and therefore we don't struggle in terms of raising capital to be able to fund any businesses that come to the table. We do debt financing for almost any business. The only exception is that we don't lend to on-lenders. We don't lend to residential real estate for rental purposes. We don't lend to NGOs, and we don't do primary agriculture. However, anything else in between there, we do fund. Our investments are between 10 million Kenya shillings to 100 million Kenya shillings. So for other countries, we're basically talking about $1 million. It depends with the exchange rate for the different countries. We lend up to 5-year tenors, and for commercial properties, we can go up to 10 years. We have an add-on that, in our opinion, makes the difference and differentiates us from everyone else. We call it technical assistance. You get to hear about it with different investors. And what technical assistance does, it's an interest-free facility, and the objective is to address all the soft issues in the business that we note during our investment process. This can be taken advantage of at inception of the investment or during the tenure of the investment. So it's something that we enjoy doing. So let me just talk about a few things about the investor's mind. And I thought this was a very interesting conversation because a lot of times we're always talking about the investee and what they need to do. But I think Tony has captured a couple of the things that that I had in mind, but I'll still talk about a few of them. But I have 5 points, David, for your sanity.
Thank you very much, Mike.
So the first thing that I always ask an entrepreneur, what is your business? And the interesting thing about that question is that most of the time, entrepreneurs are offering products. They have a product offering that they're taking to the market, and they're looking for the market to take it up. However, in my opinion, as an investor, what I'm looking to see is, what problem are you really trying to solve? Have you identified a need? Have you identified a problem? And that's what you're trying to solve. And therefore, you have a target clientele. You've already identified this target clientele. And you almost know where this target clientele is. And therefore, you're going out intentionally to reach for that clientele. Because you've already seen the problem, you've already identified the need, and that's what you're trying to solve. So your enterprise exists to solve a problem. And I think I've seen Dr. Arim Safiri around, if I got the name right. And the last time I had a chat with him, he saw a need for a need that existed in the market, and he was trying to solve it. So his business exists to try and solve that problem of that person who cannot get to the hospital, yet they still need to be treated. And that's what he's trying to solve. So the question is, what is your business trying to solve? Because as an investor, I'm very curious to know, is it just a problem? Is this a product you have that you're looking for buyers, or you're trying to solve a need? Jack Welch says something very interesting. Strategy means making clear-cut choices about how to compete. You can't be everything to everybody, no matter what the size of your business or how deep your pockets are. So with that in mind, you need to identify, what is it that I want to meet? What problem am I trying to address? So that's my first point. My second point is, where is your business going? So you've already identified what is the business that the need that you're trying to address, but where is your business going? If you look at it in the futuristic point of view, where will your business be 5 years from today? Can you articulate that to an investor and convince them? Who is your competitor? I keep laughing and saying, Coke's competitor is not Pepsi. Coke's competitor is the tea manufacturer, is the water bottling company. Because at the end of the day, somebody is asking themselves, I am thirsty. Do I take a Sprite? Do I take a Coke? Or do I take a cup of water? Or do I take a glass of water? Or do I take a cup of tea? So that's really Coke's competitor, and that's what, in my opinion, Coke worries about. For your business, are you clear who your competitor is? Because that determines where you're going to be 5 years from today. What is the impact of technology to your business? Because technology is coming to change a lot of things. And as I have a conversation with you as an investor, I'm curious to find out, have you factored in the impact of technology to your business? Then the last thing on that same angle, the question I keep wondering about, have you considered the impact of the different age groups to your business? And it's very interesting that different age groups have different impacts on business. So for example, for those of us who grew up in the time when we had analog TV, we were dependent on waiting for that channel to come on board for me to watch anything. I was at their mercy in regards to what I was able to watch. But today, with the digital space, maybe I'm still stuck there, and I'm stuck to my TV screen, because when I want to watch news, I wait for 7 o'clock or 9 o'clock to watch my news. But there's a totally different age group that doesn't watch news. And for them, the question is, how do they get the information? They tell you they'll go to Twitter, they'll tell you they'll go to Instagram, they'll tell you they go to the net to find the information. So the question is what problem you're trying to solve being impacted by the different age groups that are around? Jack Welch goes ahead to state that one should anticipate the future, study the developing trends to understand the client's challenge and pain points so that you can be able to solve that problem. So remember, there's a trend, there's a future, and you need to be studying it so that you're sure that your solution is trying to solve that problem or that pain that the client is going through. My point number 3, as an investor, what's your competitive advantage as an enterprise? What is your unique selling point? And that's a thing you need to keep asking yourself. Is it the way you deliver your product? Is it the way you package it? Is it the uniqueness of that product or service? Do you have an opportunity to even do some differentiated marketing where you're able to sell the same product or offer the same product service to different people at different prices in different locations? Are you able even to play around with some discounting as you go? And at the end of the day, who is your most valuable customer? For me, that's very critical. Who is your most valuable customer? And a lot of times I ask clients, potential investees, who is your most valuable client? And they don't have it on their fingertips. And for me, if you don't know who your most valuable client is, if they disappear, you will not get to know. Now, it's very interesting. Think about it. If you have a patient in your home who takes a regular drug every single month, has your chemist established that you are a valuable customer to them? For this simple reason, because if it's a chronic disease, that person will always take medication. And the question is, if you're running a chemist, are you aware of this person? It doesn't matter how much they are buying from you, but the fact that they come every single month, to me, that's a valuable customer to you. You need to know about them. And if they don't come to your chemist a month or the second month, you should be able to ask yourself, what happened to this client? I watched a clip of a video of I think it was a gentleman who got a heart attack in his house, and he used to live alone. And the person who saved him was a pizza guy, because this guy every single week would order a pizza. And it was a particular day, if I'm not wrong. And that particular day, this guy did not order a pizza. And this pizza man went looking out for this guy to find out, why didn't this guy order the pizza? Just to get to his house, and he rings the bell and the guy doesn't open. And he calls 911, and they come and they break in, and they found the guy had gotten a heart attack and he survived. Why? Because of the pizza man. This guy knew who his most valuable customer was. Point number 4, do you understand your numbers? Now, this part is where most investees disagree with me, but I keep telling them, you don't have to be a numbers person as an entrepreneur, but you've got to know your numbers. Because if you don't know your numbers, if your business starts sinking, you will not know. You need to know what are your margins at gross level and at net level. You need to know your monthly turnover. It's not your responsibility to compute that monthly turnover, but you've got to know that monthly turnover. What are the business trends? Is your business seasonal? There's some months where you have your highs and some months you have your lows. And how do you even measure that growth? How do you know, for example, if your business is seasonal and, for example, January is extremely low? How do you measure that your January is changing? And I would say by default, it's looking at your previous January and saying, last January, this is how much I did. This year, January, this is how much I did. How does that compare? What are the critical expenses in your business that you need to worry about? What is something else? Do you appreciate the difference between profitability and cash flow? Because I tell people there's a very big difference between profitability and cash flow in your business. How many suppliers do you have? Do you have 1 supplier? Do you have 10 suppliers? Do you have 20 suppliers? Have they given you any credit terms? Do you have the opportunity to even negotiate those credit terms? On the other extreme, what How many buyers do you have for your services, for your products? Do you give them any credit terms? And how do the two speak to each other? The suppliers and your buyers on the other extreme. As I conclude, what's the purpose of your funding? This is the most annoying question to me that I normally pose to a client, and half of the time I get the wrong answer. And as an investor, I walk away. Why? Because when you come to me and you tell me I'm looking for 20 million Kenya shillings, and I ask you, what do you want it for? In my opinion, in the next 5 seconds, you should be able to tell me why you need the funding. But many times I have a conversation and 20 minutes later, the client is still not able to tell me why they need the money. You should be able to itemize it, in my opinion, to the last coin, because by the time you're looking for an investor, you should be very clear, why do you need the money? And I think Tony also alluded to that. The passion that you describe the need and your business tells me a lot about how you're going to use that money. And then the next question, we're talking about the purpose of funding, is the question I always ask a client in a very subtle way. Do you know how many products, if you're selling products, you need to sell to break even and keep afloat, so that you're able to keep your business running and able to pay me back even if you don't make a coin? Do you know how many products you need to sell? Because when you know that, what that does is that you're able to bring it down to a single day and say, every single day, I need to sell 5 cups of coffee for me to remain profitable and to break even. Because in my opinion, if you've not gotten to that level, your purpose of funding is not as clear as you think. So as an investee, the last thing you want to be asked by an investor and you are not clear about is, do you understand the purpose of your funding? For me, that's a critical one. And does it come out naturally as you explain to the investor what it is that you want to do with this money? Half of the time, people who've come to me end up coming to me through consultants. And half of the conversation, if not 3/4 of that conversation, is held by the consultant. And that tells me, this person, I cannot trust them with my money. Why? Because if I do, and that consultant is not there to make sure the process is driven to the end, we will have a problem. So David, allow me to stop there. If anyone has any questions, I'm happy to take them up. I saw somebody asking for the slides. I'll be very happy to share them with Melania and Pauline, and they'll be able to share them with everyone. So thank you, David.
Wow, Mike, thank you so much. Amazing, amazing. Some of those questions you're asking are already rebukes in themselves right here, right now, to many of us business people and business owners. And so for our participants, please do add any questions you might have into the chat, and we're just going to have our investors in the room. Now, this is a rare opportunity where our investors are ready and willing to share with us their mindset, their mind processes as they are having conversations with you. So we have Tony Chen. For those that may have joined us after Tony had spoken, we have Tony Chen, who's an investor and the founder and CEO of Kinyungu Ventures, and we have Mike Mudengi from Business Partners International. So if you have any questions, please type them in the chat. If you want to ask your question verbatim, feel free to raise your hand and I will see it and then give you a chance to ask a question. There's somebody who had asked a question, and I can see Georgina agreeing with me. It was a thorough rebuke for some of us who've had those conversations that they didn't quite go as well as we would have wanted them to do. There's somebody who had asked a question and you had asked it much earlier in the conversation. I think it was Destiny. Destiny, maybe if you could just please repost your question in the chat so that then it's closer to me so that I'm not scrolling too far. I saw it, I captured it, but we've gone quite far down if you could repost it. Thanks very much, Destiny. Joel has a question, and this is the first question just to start us off. How long will someone realize a break-even point? Should this be reflected on the cash flow focus? And I'm imagining, I don't know whether the question is clear to you, gentlemen. Probably asking how long will it take to realize the break-even point? Over to you. Who wants to start?
Tony, you want to go first as a real entrepreneur?
As Mike takes swallows some
water.
Over to you, Tony.
Yeah, it's so much is dependent on the kind of business that you're running, right? So, I mean, it all like kind of like what Mike alluded to. Like if you're running like a retail shop or whatnot, like, and you have fixed costs that you have to pay for regardless, whether you sell 1, 0, or 100 items, and then you have these variable costs. And so, like, I mean, it basically comes down to the math, right? And how long can you, as the entrepreneur, kind of sustain the business while it's still unprofitable, and then finally start making a profit. So, and then there's always ways to try to, how do you increase revenue? How do you decrease cost? And how do you make it so that you can make it for another day, and those kinds of things. So it really is dependent on the business. Mike, over to you. What would you say?
Yes, that's true. And for me, the way I even look at it further is that besides your my screen is really misbehaving over here. I don't know what has happened. Sorry. Look at your actual costs. Besides the fixed cost, you also have to look at your variable costs, because there's what it costs you to produce a service or a product. So whatever it's costed you, you've got to itemize it to the last coin, in my opinion. And as you do that and itemization, then you're able to tell, this is the break-even point that I need to reach. So for argument's sake, if it's going to cost you 10 shillings to produce a cup of tea, then you need to go to the extent of saying, my rent for argument's sake is 20,000. If for argument's sake, I produce 200 cups of coffee in a week, how much is rent per cup of tea, cup of coffee? And you itemize to that level. Then you say, then now you know that how much is it going to cost me for a cup of coffee? Is going to cost me 5 shillings, 10 shillings to actually produce the cup of coffee. Then these are the costs that are not directly related to the cup of coffee I need to incur. Therefore, my total cost of producing a cup of coffee is 15 shillings. And then now you need to ask yourself, what's my total cost for the month to remain afloat? And then you're able to tell, I need therefore to produce this number of cups of coffee every single day to remain in business. And until you do that, gentlemen and ladies, as a business, as an entrepreneur, that's where it really breaks. Because if you come to an investor and you don't have those numbers to the last point, it's very difficult for the investor to agree to put their money in your business.
If
David, I think
right,
I saw a question. Sorry. Yeah. Go ahead,
Mike,
David.
I just want to zero you around that space for a bit. If I'm hearing you right, I'm hearing you say, for you to calculate, and you've come up with a very interesting model on break even, for you to come up with your costs or your break-even point, your break-even number, is really break down each cost per what you're selling currently. Is that what I'm hearing you say?
Yes, to a good extent. And it's called, I'm trying to remember, there's an accounting word they use. I think it's called...
unit economics, maybe?
Yes, unit economics. You actually need to do your unit economics on your at that level of your product. So you need to separate two things. What are my fixed costs and what are my variable costs? Now, remember, your variable costs are the costs that you incur to produce that service or that product, depending on what it is that you're doing. Then there's the other cost that you will incur, whether you produce 0 products or not. So for example, the things you say, the salaries, because you've got to pay the salaries of your employees, the rent, you got to pay the rent. You're going to pay the licenses that you're going to get to run that business. So you need to identify those costs. And then you also need to be careful. There's some costs that really sit in between fixed and variable. For example, whether a vehicle carries 10 items or carries 100 items, which is its capacity. The cost of running that vehicle is still going to be fixed to a certain extent. So the more products you put in that vehicle, the more you're able to vary your costs. The less you put, the higher your variable cost in that sense. So you need to get to that level. And I know we are not all accountants and numbers people. That's where your accountant comes into play. Challenge them, get them to give you those numbers so that they're helping you to make the right decisions.
You know, Mike, as I'm listening to you, I remember one time at the exit of James Gishuru onto the highway, Wayaki Way, there was this tuk-tuk that was so full of tomatoes. And in the bid of crossing over, there was a bit of an incline. And when it began to go up, it just went down because they were really maximizing on how much they could put onto that tuk-tuk. Very interesting. Now, I know you've seen the question that Josephine had put up, but there's the question Destiny had asked. I think you've answered it in the way you explained what you look for at business partners. Hello, Destiny said, hello to Mike. Kindly, what are the requirements for one to get financial assistance? And I just wanted you to tie that with the question that Josephine was asking, where she said, you spoke about how many products you need to sell. I think that was still around break even. What would be the question in the case of service? Yes, I think still around that break even. I think let's just milk it now that we are at it. In the case of service, and maybe you can both speak into it, gentlemen. Over to you, Mike.
Okay, let me give it a shot, then I'll let Tony also jump in. In service, I look at it, and for example, let's take a business like what TBN is doing, because it's costing them money. They still have rent to pay, assuming they have an office. They still have employees to pay, for example, their admin staff. So that therefore becomes their fixed cost to that extent. However, they will have their variable costs, because if they have consultants who come in specifically just to do some specific training, those guys are not necessarily direct employees of TBN. However, they still need to pay those people. So you have to cost it to that level and say, if we're going to hold this particular program and it's going to run for the rest, for argument's sake, for 3 hours, are we going to hold it in our office, or are we going to hold it in a hotel? If we're going to hold it in a hotel, how much is it going to cost us to hold it in the hotel? Then you're going to ask yourself, how much am I going to pay the consultant to get this running? Then I have my normal operating costs that I need to ordinarily cover. So when you're pricing that particular training, you're saying, this training, I need to charge 3,000 bob per person. But on the other side, you need then to say, if I don't get a minimum of 10 participants, then I will not be able to make any money on this particular training. And therefore, Jacob, as he's trying to figure out how to run this program, he's calculating what's a minimum participants I need for this program, so that I know I'm able to break even and make some money out of it. So anything above this, I'll make money. Anything below this, I will not be making money. And now he makes a conscious call. Do I still proceed or not? I'm trying to think of what other service. Think of even the doctor on wheels. He has to do the same calculation and say, how much will it cost me to move from my premises of my operation point to the patient that I'm going to treat? So most probably, I suspect he has done some zoning so that he has some logic in his how he charges, and say, if you're in this zone, it's going to cost you this much, and that way he knows that is his break-even point, and he's going to make some profit. Tony, I don't know what your thought is on the service side.
Especially with tech, Tony. I had a chance or had the privilege of selling Oracle when it was just coming into the market. And when we talk about development costs, and sometimes you'd walk into a room and mention some of the pricings, and they'd lose their minds and tell you, we'll talk to you later. And that would be literally later, like never. Anyway, over to you, Tony. What does that look like in some products that are not so defined?
I think Mike said it well, and it's just a matter of if you do provide a service, make sure you're thinking through all the costs, right? Like, so, so a lot of times people forget about the costs where they're down, like when they're, I don't know, like insurance, or if you're driving an Uber, then when you have to get it repaired, and when you have to it's like you got to make sure there's all these costs. Like when you're doing food, there's a lot of wastage, and there's, so all these little things have to be added up. And so I think, Mike said it really well, just the unit economics. Make sure you have all the costs in there, even the ones that maybe only happen once a year.
Wonderful. Awesome. I have an interesting one, and this is quite right down your alley, gentlemen. I have been able to raise, this is from Jesse, I've been able to raise some growth investment, 40%. And he's throwing it right out there. Can you chip in there, the 60% equity share available? Maybe we could hear from Tony and then hear from Mike.
Oh, I thought you were going to give that one to Mike. I mean, that's a great start, right? To be able to get 40% already. And usually the first check is harder to write than the second. So for depending on the sector and you would have to find the right kind of investor who invests in your kind of business, in your kind of ticket, in your kind of stage, and in your kind of instrument. Some people just do debt, like kind of what Mike is talking about. And so you just have to find the right investor that matches all those tick boxes, and then start having conversations.
Interesting. Mike, you look like you want to add into that one.
No, it's very interesting. The other day we were discussing, I was having a conversation where somebody was asking me as Mike to get in as an investor in a small business. And one of the conversations that we were having on that table is that they had done some projections, and they'd used those projections to determine the value of the business. And they were telling me, depending on how much you give me, this will be the level of the shareholding I can be able to give you. And for me, the first thing is that, now remember, I know where the shoe is going to pinch, because the more money you ask me, the more shareholding I'm expecting. But this, in my opinion, these people were very bullish in their projections, and therefore, in my opinion, overvalued the business. Now, remember, as an investor, I'm looking for the highest shareholding at the lowest price. On your side, as the investee, you're looking for the highest share value at the lowest shareholding. Now, and it's a matter of, have you factored in? And for me, I was going into the nitty-gritties and asking just the same conversation. I was looking into the nitty-gritties and saying, what is your basis for your projection? I'm looking at your projection. How have you projection? What are the assumptions you've made to arrive at those projections? What are the costs you've put in here? And some of them are saying, some of these costs you put in here are very low. You need to put them up. And some of your projections you put here are too high. You need to bring them down. Tony, I don't know whether you've been caught in such situations.
And maybe I can just add in there as you answer that, Tony. What are these? What should I consider when I'm valuing my business? Because I'm imagining sometimes we just do carry on, and this is what we think the value is. What really should we consider? Maybe as you respond.
Yeah, valuation is going to be one of those topics that there's really no answer, and there's also no formula. Especially for early stage ventures, especially for small businesses. As businesses get to a certain scale, then there's kind of comparables and multiples and things like that. But when it's early, it really is about your story and you, as much as it is about the numbers, right? So, I mean, so I think it's, what kind of story can you tell? So it's very subjective, it's very subjective. And so that's why a lot of, at least in the venture capital space, they'll do, a different kind of instrument called like a SAFE that kind of kicks down the road, kind of what actually is the valuation, or, that's kind of what the idea of a convertible note is. Maybe we don't have to talk about valuation just yet. So those are kind of all issues that, that are key. I would maybe disagree a little bit with Mike on one point where he said earlier, as the investor, we're always looking for kind of the most shareholding for the least amount of money in a way. And I would say that's mostly true. I think there are times where, you don't, as the investor, actually, you don't want to take too much, because actually, so like if you take too much from the entrepreneur, then the motivation and the feeling of the company changes. So I think it's not always like I win more, you win less, or that kind of thing. It is a partnership. So I think that, in an ideal world, you would sit down with the investor and you guys would really talk it out and work on the equity kind of. So like and this also comes up when you have co-founders, like how much, this guy's not pulling his weight now, he shouldn't have so much equity. The way I typically approach these kinds of situations is, at the end of the day, hopefully you have good working relationships with your key co-founders. And so I always say to my co-founders, if at any time you feel like the equity split is not right, then let's be a team that doesn't let, you don't sit with that and that burn in your heart, but bring that up and let's talk about it, and let's do it. And for me, like, equity is all about what's the value created and what's the risk taken, and that equity should be a, kind of proportional to those two things. And oftentimes the investor is taking quite a bit of risk and deserves, some equity for kind of the risk that they're taking.
Interesting. So, of course, Tony, you're living up to your statement that you'd like to look for conflict. So, just looking at this, what should Jesse do now that he has his 40% ready? What should he do? And both of you need to answer this, because I feel he's looking for a way forward.
I mean, I think it's honestly, you got to keep on talking to people, keep on asking. I mean, the investment thing is not a smooth linear track.
Yeah.
You have to find the right people with the right values, with with all those things that are right, the stage, the sector, the instrument. And so it just takes time. I mean, honestly, the best thing that you have going for you is that you already have that first 40%. That's the hardest part.
Yeah.
So if you can find someone else, and then maybe that other investor can also help, that would be, kind of what I would think as a path forward.
Okay, maybe to just add to Tony, I think you also need to be careful as an investee looking at investors, because like I mentioned, and Tony rightfully says, you don't want an investor who is taking the biggest chunk of your shareholding and leave you with very little. So you need to also be able to be very clear that there are times you will walk away from an investor because they're not the right investor for you. Because if the investor is going to take a majority shareholding, especially at a startup level, you're going to be in trouble. Because chances that with time, if you're not careful, they're going to kick you out and take control of the business. So in my opinion, you need to be careful. And maybe to just answer Alex's question indirectly in the same breath, how do you stage the different funding rounds? I think for me, the question is, what is the purpose of the funding? As long as you have clarity about the purpose of the funding, then you're able to tell, and then have very clear milestones and says, give me the first 10 million today. With this 10 million, this is what I expect to deliver. Now, if you deliver what it is that you are hoping to deliver with the first 10 million, then your second 10 million, your second 15 million, you have a better leverage as the investee when you're having that conversation. And which then speaks to what I think it's Megan saying. After this investment, my unit cost is going to improve by 1, 2, 3. Why? Because this investment has made me improve some efficiencies or do something differently. And Megan, I totally agree with you in the sense that this investment is going to change my costs, my unit cost from X to Z. And being at Z is a better position, and therefore my margins have therefore improved. And therefore, Alex, at that particular point, when therefore now you're going for your second round of investment, you're at a better position and you have a better story. Because initially you're a startup, we had to be, as an investor, I had to believe in your story. Now it's more than believing in your story. I can see your story and I can see the results of your story.
Yeah, I love what Mike said just really quick there. The stages of the rounds would be like chapters in your story, right? So it's like it's like, this is the chapter, this is where the milestone that I'm gonna meet, like Mike said. And then once you meet that milestone, once you reduce that risk, once you answer that question, once you get rid of that uncertainty, that next stage is the story becomes that much better.
Yeah, and I think Megan's point is in reference to a conversation Lillian had started, where she says, my question is to Mike, and I might have a clear purpose as to why I need the money for in this case, I produce shea butter, which is a hot cake within African countries in the cosmetic world today. And I'm in need of machines from India, which cost me like 100,000 USD to bring it in. On a monthly basis, we produce 5 tons of shea butter, and we have clients requesting for 40 metric tons. I go to an investor with this, and I'm not funded. What could be the problem? Is there something I said? Is it because I'm black? Anyway,
No, and that's interesting. And Lillian, it's very unfortunate that no investor is willing to have a conversation with you. And to look at it 2 ways. The traditional lender looks a lot at historical data to make a decision about the future. You've got to find an investor who is willing to look at the cash flows into the future projections based on your 40 metric ton demand to be able to do that transaction. And Lillian, I'm happy to have a conversation with you and see whether it's something business partners would be interested in.
Hey, amazing. I was wondering whether that was going to reach there.
Asset financing, it's right up your alley.
You know? Thank you. Don't you want to chip in, because you've raised multiple times? What has your experience been, especially when you've had a lot of coffees as well? What pulled you away from some of those deals? What pulled you away from some of those conversations?
Yeah, I mean, it's different when if it's kind of like your money versus you're deploying someone else's money. Deploying someone else's money, you really have to be so disciplined. Like this is the box I can invest in, and really nothing outside that box I can invest in. So if you don't fit in that box, I'm sorry. And that's,
the money has a name.
Yeah, the money has a name, right? If the money's your own, then you can sort of make your own call. But all the things that Mike said in the beginning are actually a lot of the things that we'd be looking for in the beginning. So it's like, yeah, all those things. Can you answer these questions? Does it seem like it's clear that there's a clear plan and kind of the articulation of the strategy in the future? So yeah, that's what I would say there.
Michael K asks, how do you balance between a supplier that needs cash upfront and buyers critical that have long credit terms? And okay, I think he's saying, how do you balance between a supplier that needs cash upfront and critical buyers that have long credit terms?
This is like a problem everywhere. I mean, it's just this is like, I hate this problem, right? And this is not products, right? This is like you sell it to the grocery store and they pay you like a year later, but you had to buy it then, right? The same thing happens in consulting companies, right? You get the project, you're paying your staff, and then you invoice them at the end of the project, and they pay you 90 days after that. So it's like, this is the classic working capital problem, right? Your funds are coming, they're just later. So right now, this is just, in my mind, this is kind of an inefficiency in the system. And there's some players trying to address this particular problem of working capital, because your business has data around how quickly you've bought and how quickly you've sold and all that. So like some of those data-driven players are starting to look into, lending there at scale. But it's a big problem.
Yeah. No, it's David, it's every entrepreneur's nightmare, to say the least. I think majority of the entrepreneurs you encounter will always have this challenge, and they have to deal with it. There are people who've come on the table, they're able to find, we've tried as business partners to address a portion of it, because it's a huge problem. However, I did deal with one client, which was very interesting. And what I challenged them to do is to look at their processes to see whether they can try and address that problem. And allow me to share the experience that I had with this client. This client was in the advertising space. And what they used to do is they would sell advertising space on air. And what they would do is that they would get their sales team to go and get an LPO, and the LPO, based on the LPO, they would be able to create the ad and put it up, and it would run. And they would get paid 60 days later. But we noticed one thing that was very interesting. They used to pay the salespeople upon receipt of the LPO. And therefore, the problem was always left with the credit controller to chase for the collection. And therefore, at one point, the credit collector had this whole bundle of pending invoices that he was having to keep collecting on a daily basis, and he was making no traction, and he had come to the bank for borrowing to be able to fund his debtors. And we challenged them and we told them, change your processes. And they asked us, what process can we change? We told them, stop paying your salespeople commissions on delivery of an LPO. But don't throw the baby with the water. Split it in the middle and say, we pay you 50% commission on delivering an LPO as a salesman. We pay you 50% upon payment of the invoice. What did that do to that business? Their debtors reduced from 90 days to 30 days.
Wow.
Why? Because the salesman now was motivated to do that. However, on the inverse, they lost half of their sales team. Because the sales team was like, I'm used to being paid upfront. If you're not paying me upfront, I'm gone. And our challenge was, let them go. Get a new sales team that comes in on the new terms. Their business didn't change. I would say their turnover didn't change that drastically. Initially, it dropped a little bit, but with time, it caught up back to where it was because they had built a reputation. But they sorted out their data problem by just changing processes. So that one of the questions as an enterprise you need to ask yourself, is there a process that I can change to improve my cash flow position?
Wow, interesting, Mike. And my curiosity is getting the best of me. I think I worked for an organization like that, but I think at the time I was too near for them to listen to anything I had to say when I suggested something like that. Over to you, Tony. You had some input on that as well.
I think Mike already mentioned everything. He
Wonderful.
said it best.
Yeah. Ishika, just responding, I think, to the same question was like, the payment terms that you're getting is dependent on how you're negotiating with your supplier. And I think sometimes as business people, we imagine, let's not leave the money on the table, number one. Let's get the order in, then we can talk about when we get paid. That once you take the order, it's not going to change. The contract terms are not going to change. It's in the contract.
David, if I can just chip into that, you raised an interesting point that is very interesting there. So I had this client who once came for funding on invoice discounting. And it was very interesting. This client, when they were working, unfortunately, with Nakumat at the time. So they were given an order and they delivered. And initially, they used to be paid in 30 days. Then it moved to 60 days. Then it moved to 90 days.
Yeah.
At the time I met them, it was headed to 120 days. So they came and said they wanted money to deliver the LPO they had from Nakumat for, I can't remember what exactly it was, but they needed to deliver. So they needed working capital, they needed some cash so that they can go purchase the product, produce and deliver. So we sat them down and told them, we can't fund you. But they were saying, this is Nakumat, it's the largest supermarket in the country. Why are you not listening to us? We said, okay, fine, entrepreneur, please have a seat, let's have a candid conversation. So I asked them one simple question. So how much does it cost you to produce this product? And they gave me number X. How much do you sell it to Nakumat? They said Y. So what's your profit margin gross? This is my profit margin. So I said, oh, thank you very much. Okay, fine. Let's put that aside. Now pick a piece of paper and I gave them a calculator. I told them, how much money do you want? They stated. I asked them, how much interest am I going to charge you for this? And I told them, this is the interest I'm going to charge them. And I gave them the number. I told them, calculate, how much will it cost you for that loan for the next 30 days? And they calculated. And luckily for us, A in that case, our result there was still lower than the difference between their cost and their sell price. So we were good. So I told them 30 days, we are fine. Assuming you don't get paid by Nakumat in day 60. How much will you have paid me on interest? They did the second calculation and the number was still okay, but it was now at the edge. And I told them, now let's do the third month. They did the third month. The entrepreneur walked. They just stood up and told me, it was nice talking to you. Have a nice day. I said, no. We were trying to do some funding transaction. They said, no, I am being ripped off. I have no business doing work with Nakumat. And they walked away.
That's right.
And it's about getting down to the numbers. It's about getting down to the numbers and saying, why am I doing this transaction? So like somebody has rightfully says, the supplier, you go to a supplier and you feel as though they're the king, but you need to ask yourself a question. If this supplier asks me to pay cash and my buyer is going to ask me to give them credit for 60 days or 90 days, what is the profit margin I'm making out of this transaction? Is it even worth my time? So for me, that's a very fundamental question. As you go to your supplier, be very clear, what's the minimum you can take? If you can't, it's not worth your while, go look for another supplier. It might not be the ideal supplier you want, but maybe something like that.
Wow. Just such amazing insights. I don't know, Mike, whether you have these numbers. Cheetah from India is joining us today from India, and he's just asking the current private debt interest rate in Kenya. I lost track. I've not been in the private system for a while. You know,
it varies. It varies. I would say now we're talking about from 15% all the way to 25%.
Okay.
Yes.
Okay. Great.
Yeah.
I hope that's helpful, Ishita. So I have two last questions as we begin to wind down. And I have a question from Del, who's saying, how do we best prevent being vulnerable and dance according to the tune of an investor? And I also want to tie that with Megan's question, which is, what's the range? Well, this was specifically directed to Michael. What's the range of your debt terms for interested entrepreneurs? I love your Nakumat example. We are not in modern trade for these reasons, especially as 80% of the market is in general trade. And she also put in there the private debt rate. So maybe you could start with the question on dancing around the investor. I know you've danced around some people. You've had some people dance around you at the coffee table, and then Michael, you can chip in as you. And by the way, feel free to answer both questions, gentlemen. Over to you, John.
Yeah, I mean, it does come down to just. I mean, it goes back to kind of why this goes back to the very beginning of the conversation. It's like, why are you doing this business, and what are you trying to accomplish? And there's going to be some people that you have to work with that may, or like at some point they may just cross a line. It's like, I don't want to deal with this person anymore. I don't need their money, you know. So it's really going in strong. I think it's a little bit of just like going in strong, of saying, knowing that what you're doing and what you offer is really strong and really valuable to the world, and that there's going to be others that can come and you know, fund your business. You know, if the terms, sometimes it's a term thing, right, where the terms are too grossly tilted towards the investor. Sometimes the terms are okay, but the investor themselves are just not someone you want to work with, and it feels like maybe the values begin to misalign. That's also a great, I've seen that happen as well, where people just like, the terms are fine, but the investor himself was basically not acceptable, right? So I think it's going in with with confidence and strength. What you're building is great, and you're going to find the people that you're going to find, and you don't have to work with, you know, every investor. Maybe I'll leave it there for now.
All right, Mike.
Yeah, and I think like Tony says, the way the investor is choosing you, you should also be willing to choose the investor.
Mm-hmm.
I think most of the time entrepreneurs find themselves in situations where they feel they must deal with this investor, even when it doesn't work for them, just because they need the money. I know it's easier said than done, because if you need the money, you need the money, but there are times you need to walk away. because the deal is just not, it doesn't look good for you and you need to walk away. Then to respond to Megan's question, what are we looking, what are the terms we're looking at? From where I sit, I'm interested in a couple of things. Is this business viable today and into the future? Because there are times when it might not be, today it's not profitable, but it's still viable based on what the future looks like. Looking at the trends, it still looks viable. And it's at times we get into that place where we say we can still invest in that business, even if it's not necessarily profitable today, but because we are convinced it's viable into the future. That's number one. The other thing that we're very particular about is the investor, the entrepreneur themselves. Do they have the competency to run this type of a business? Because it's one thing to know to have a business, it's another thing to have the competency to run the business. Either you've been in that space for a long time, either you have the training in that industry, or you have a very competent team behind you that is supporting you. For us, that's very critical because, for argument's sake, let me look at a very simple illustration. So an engineering business. If you're running an engineering enterprise, if you have absolutely no engineering background of whatever nature, it's very unlikely that we will fund you. Why? Because we're saying, as much as you might be able to run it, there's some nitty-gritties that you might miss simply because you don't have the training or the background in that industry. So you really have to convince us. There are times we do it, but you really have to convince us why we should fund you if you don't have that level of competency in that particular industry. So for us, those two are very, very critical. And then last but not least, character for us is number one. If we smell a rat, we walk away. So we will look at your CRB, we will look at your financials, we will look at your bank statement, we look at everything that we can look. And I always tell people, give me your best supplier, I want to talk to them. Give me your best client, I want to talk to them. If your best client is going to hesitate recommending you, I have no business doing any transaction with you. If your best supplier is hesitant to recommend you, I have no business talking to you. So we dig and try and find as much as we can, because what we've established is that character is at the top of everything else. You might have everything else, you might have security, you might have everything, but if character is wrong, it doesn't matter. You will not pay back the investor. So Megan, I'm happy to have a chat with you after this, and get into the details specifically for your business, but in general, that's really what we look at.
Wow, amazing, amazing, amazing. As we begin to bring this to a close, gentlemen, and you've really answered the questions beautifully. There's this conversation we keep hearing. I don't know whether this is true for you as investors. There's more money on the table. There are people willing to take it. Is that true or not? And as you answer that, you could give your closing remarks.
You know, I think that the
give me 1 second, please.
Santa, allow us to begin to bring it down. I've seen your question, we'll respond to it. Thank you. All right, carry on, gentlemen.
Sorry, Mike, you go first this time.
Sorry, I got distracted for a second there as the voice came in, David. What was it that you wanted us to respond to?
Around being an investor. If we could define who an investor is, that was a question she had asked.
Okay, so who is an investor? An investor to me is somebody who is going to give you money in two ways. They can give it to you as a shareholder, or they can give it to you as debt. To me, both of them are still investors, because at some point, you need to buy them out unless they're in it for the long haul. So for me, that's the way I would look at it from an investor point of view. Is there more money in the market than the takers are? Yes and no. Some industries have more money than the off-takers. Some industries are completely starved. Some industries, the conditions of an investor coming in are so stringent that no one can be able to take their money. So it's a yes and no, and it just depends. And then there's also the other bit is that it always seems that the money is in the pocket that you don't know exists. So somebody has the money, but no one seems to know they have the money to give out. And on their side, they're so frustrated because they're thinking, no one is coming for this money and I have it. So there's always that bit. And I think one of the things we have to keep doing is matching the investors and the investees, because I'm not sure we've been able to do that 100%.
Okay.
Tony?
Yeah, I like how Mike framed it. I think I would also say it's yes and no. It depends on this sector. Like, it's so specific, right? You can be like a financial services company and it's, and it's one environment, but you just turned a little bit, and now all of a sudden it's fintech, and now it's a different thing, and then now you go into, so it's so specific to the different pockets and the different sectors. So I think it is yes and no. And I made my first investment in Kenya in 2016. One of the things I've seen over the last 6 years is that there are more and more players that are filling the gaps. I wrote this post on my website a while ago, and it was basically the post was who in Kenya is writing the $25,000 to $75,000 checks. And a few years ago there weren't that many, but then I wrote this post and there was all these people. It's like, oh, you forgot to include this and this and this, and there's like 40 of them, right? And there's probably more now. That post is a year old now. And of course, they each have their specialty of what they invest in. So, but I think that it is more and more, but it really depends on what sector it is. And, typically small business is kind of like the hardest place to be. Because you're sort of like in this, it's not quite bank, and it's not quite like these other, they would have to be specialty for either your industry, your sector, or your type of financing, like asset financing or something. So, if you can imagine the whole ecosystem, there's all these people with money and there's all these people looking for money, and actually the matching is very, very inefficient. Like the people with money are actually looking for deals that fit their thesis, and they can't find them. So a lot of it is why these kinds of events at TBN is useful, is to, find more people, network, you'll find someone who got a loan from someone that was actually a very good investor, and actually that counts, for everything, that referral to a good investor.
Wow, gentlemen. Thank you so much for your great insights. You've really given us some things to think about, and can't wait to have you guys back again in the near future, just to be able to discuss this again, and maybe even more conversations around where the business, where investment is going, and how we can position ourselves for this. As Tony has mentioned, we have many of these events, and we are looking to make this more regular, and we will be having different topics. And so we just want to do a survey, one, to hear from you what are some of the things that have been valuable about today's session, but also to hear from you how we can better improve these sessions so that then you get as much value as possible. We are here to help your businesses move forward. We are here to add value to your businesses, and we would want to address conversations or have conversations that are driven by you. So the survey link has been tapped there by Pauline. Pauline, you seem to have shared the one that is not active. Share the active link. This one seems not to be active, so that we can just click on it and go straight to the link. I think there's a H missing in HTTPS, which makes it something else other than the link. But otherwise, Mike and Tony have shared their details. Please feel free to reach out to them. They're open to engaging with you. Of course, taking into account some of the things they have put in the chat, and just great. So please do fill the survey that we are sharing. And at this point, I just want, if Jacob is still in the call, or anyone from TBN, to just close. Jacob, you're still there. To just maybe give some closing remarks. I know this was not in the script, but hey, you're here. You opened the meeting. How about we just have you close it as well and share some thoughts as we wrap up? You're still muted, sir.
How about me asking Pauline to, she's our convener, so Pauline, please say something. Pauline, you're there?
Are you there?
Yeah.
There you are.
Hello, everyone. So thank you so much for tuning in. We're grateful. We're always happy when we bring entrepreneurs together to learn and get to interact and get advice. We hope we've added value to you, and we hope that the insights that you've gotten have been helpful. So my name is Pauline, and I'm the Marketing, Partnerships, and Community Engagement Lead at TBN Africa. Thank you for coming, and have a great day. We'll keep sharing the link so that you're able to give us some of the feedback about how the event, or rather the webinar went. So thank you once again.
Wonderful. Before you run off, please do fill in the survey that we have shared with you. The survey link is right there. You're looking for the one that says survey link. That's the one that you need to click on and fill in. I know a number of us have shared their social media details. Also, please do share your name and the name of your business, and if you can, your contact details. Would love to get in touch with you. Just share that with us, and would love to share with you. If you'd like to meet investors, if you'd like to connect with other business people, and you're not in any of our platforms, please do share your details with us. Type it in the chat. We'll be more than glad to engage with you. In the meantime, type in click into the survey link, and just give us your feedback. Tell us what other topics you'd want to hear about, and we'll be more than glad to engage with you. Thank you for those that have typed in their details. If you can, please share with us your contact details, name of your business, so that then we can also be able to continue to share more of these sessions as they come in. Wonderful. Thank you so much again. Thank you so much again for engaging with us, and looking forward to plugging in and connecting with you in the days to come. Thank you, Megan, for that question. I've seen it. I'll confirm and get back to you on the same. Right, wonderful. Back to you, Pauline, if you have any music as people are filling in the survey, so that then they can continue to fill that even as we go. We would encourage you to fill in the survey before you depart, so that then you don't forget to fill it in.
Welcome to Transformational Business Network Breakfast, where we are hosting over 30 entrepreneurs. In this particular breakfast meeting, we'll have the investors speak to them about the expectation of investors when they are planning to invest in business, to help them prepare their businesses to be investable. So we are hoping to have a warm interaction. We have Michael from Business Partner International, we have Matt from Thunder Fund, and we have Jesse from True Value. We look forward to a warm interaction with our business partners, and we're looking for a warm interaction with the entrepreneurs as we explore some of the challenges they face in the journey of scaling their business and impacting the community, including creating jobs. Some of them are in the export business, others are in healthcare, others are in agriculture, and we're just looking forward to having a wonderful time.
One of my challenges would be when I supply products to supermarkets, it takes really long for them to pay us.
My biggest challenge, I think, is growth. My biggest challenge in businesses is finances.
Trust in processes. Our challenge is marketing.
Having different things that are out of your control, like payment cycles for other companies.
Our main challenge, I want to call it challenge, is marketing.
The challenges I face is self-doubt and my own personal fears.
My first stuff, I employed a relative. And that was...
You started on a high. I made the mistake of getting into a business in the name of love. choosing the wrong mentor was business-wise very painful. So thank you.
There were so many other challenges that were happening in my organization because of drought, because of bad weather, and we are losing sales. And there are so many challenges, including human resource management. And I was asking myself questions. How do I come out of this? How do I learn more? How do I attack the challenges or respond to the challenges? In my desire to learn, I was introduced to TBN through an organization called Africa Agribusiness Academy. I have no regrets. It was very good for me, and that's why even as I was engaged as an alumni, I value being a member of TBN network.
My name is Derek Weiswar, and I'm the Chief Operations Officer for Transformational Business Network Africa. We are a network of entrepreneurs and investors who would like to use business for good. And listening to all your stories of how the challenges that you're facing in your businesses, and the common thing is, yes, there is profit that you would like to make, but there is a common good that you would like to address in the community.
The good thing about the TBN program is that it has an impact lens and not so much so profitability and what you get out of business. So having an impact lens in a business helps you be able to see the value that your company brings to the society, rather than how much can you get from the society or from the population or audience that you're targeting. So that is a good thing about the impact program, and I've seen a great change when I look at how much impact and value can my business bring to the people, rather than what can the people bring to my business.
We hinge ourselves on 3 C's. Most of you have heard about them. The first one is capacity building, rather the training, where we take you through our 6 months program. Some of you have gone through that program.
One thing I learned through TBN was just to be able to understand accounts properly, and even have that intelligent conversation and be able to ask the tough questions and ask, yes, I look like I have money on paper. You have all these invoices that are out there with the hospitals, but I don't have any cash to, I'm feeling like I'm struggling to make payroll. I'm struggling to pay suppliers, though I'm paying everyone on time, but it's you feel like the internal tension because of that. But now, being able to look at this, I was able to understand what are receivables, how do I collect money effectively.
The second one is capital raising. Since 2019 alone, Kenya has attracted $1.9 billion of investment. Businesses in Kenya have attracted that amount of money. We have no fund as TBN, but because capital raising is one of our functions, is one of the things that we would like to help you to do. How about if we gathered you here today and we brought the experts to tell you what is inside the investor's mind?
So having today's discussion and trying to see what is in the investor's mind and what they're looking for, then for me as an individual, as a company, we can go back and now, as we're doing our investor pitch, then we can actually go and check all those boxes. And for me, the most, one of the takeaways was, do I have clarity? Do I know what I want? Is it just that there's money to be given or there's money to be lended, and now I go ahead and apply, or there's a grant? Where do I want the money? At what stage am I, is our business at, and what levels do we need to scale to?
The third C that we focus on is community. I mean, I was just standing right out there listening to all your stories, challenges that you're going through. Some of you have been gracious enough to tell us how you have overcome some of these challenges. Since we have provided an avenue, a community of like-minded entrepreneurs like you to come and speak to one another. When she was speaking and saying, well, I have a problem, no one is buying my avocados, but there's someone next to me here who wants to build a factory. I was like, wow, that's a good B2B there, business to business.
as people will say, your network is your net worth. So I would say a big thank you to TBN, because this is how entrepreneurs grow each other. I know that from today, I've met somebody who sells leather bags or even chili. You never know, I could recommend them somewhere, or they could recommend me somewhere. So it's a great opportunity.
If you want to succeed in business, the first thing to me that counts big time is integrity. Whatever you do, you engage in such a way that no one will come and question the integrity of your business at any given time. Make sure that you're able to do everything and you're able to become accountable. First to self, then to your partner, and to every other stakeholder who is actually in there. So the second thing is about courage. So the courage to face the customers who are so meaningful to you is very important. The courage to go for suppliers whom you can explain to what your plan is and be able to supply. And because you're led by integrity, you will go to them. They will give you those materials that you require on credit. But because you're a person of integrity, you'll also be able to pay them on time. The other one is consistency. If you look at businesses, a lot of times when we are pushed back by wind of discouragements, we tend to become a bit discouraged. I want to tell you to work at that business proper. Remain in there, yeah? Because there's certain things that you looked at in the beginning and you said, this can actually take me to where I want to go. If you have already prepared your business plan and your business model, and you have it vetted maybe by your financial analyst, someone who is able to go through it well, then you should be able to say, I want to remain on board. The last thing, and I also noted that on the TBN roll-up banner, is scalability. Is your business scalable? By looking at it in terms of, if you're likely to expand your business, is it going to reduce the cost per unit? Let me just use that as the simple indicator. That as you scale up, does it reduce the cost of production or the cost of the service per unit? You know? So that the amount of revenue that you generate, therefore, is higher in terms of the margin than what you're getting when it is actually small.
Anyone who's been in business may not know the term crowdfunding, but I'm sure you're very familiar with the concept. If I ask everyone around this room to share how they got money, I'm sure many of you will say they used their savings or they had another job where they were paying into the business. And many of you have had experiences reaching out to friends, relatives, even classmates of, can you support me? I'm building this business. How can you help me? And what we seek to do is answer that question of how can we make that transaction a win-win situation? Because when you're asking money for a business, you're not begging. You're asking someone to support your dream, and you're inviting them to be part of your future and giving them an opportunity to participate. And if you can give them something of value, then that's obviously going to increase their likelihood of giving and also how much they're going to support. So on the far end, if you're a mature business, then maybe you have good financials and you can actually offer a financial return. You probably shouldn't be offering a financial return if you're so early and don't yet have the cash flows to be able to fulfill it. So for the starting side of business, you'd get more donation, like just a small bit of pesa to help me get started. And then for those in the middle, especially those which are B2C, and that's what I want to focus on, is rewards-based crowdfunding, where I don't know if you've heard of Kickstarter or platforms like that. You offer something like a product, a service, it could be merchandise like t-shirt. If you're digital, it could be like, if you're a musician, it would be a digital album, something that you are in the position to create that you can sell to your audience for money. And the idea is, how can I raise money now so that I can get money, I can deliver something of value to you in the future. And so the rewards particular to your business are exactly that. It depends on you. I can't answer for everyone right now, but on a one-to-one, we could figure out what are those areas of value you can sell.
Why do investors shy away from investing in a business?
Welcome to Transformational.
And within 3 months, we are able to gauge and to tell exactly where the company is heading to. The second stage of the three, first is the assessment, second one is the pre-investment stage. In the pre-investment stage, we do some BDS, business development services, and these are tailor-made. In that, we sit down with entrepreneurs, walk down the challenges facing the company is facing, and try to understand where do we need to add value before we go to the third stage, which is the investment. In the last stage of our processes, the investment stage, we invest, we are equity investors. In that, we become shareholders upon investment. And uniqueness about our shareholding is we don't go for majority shareholding. The maximum ever we can ever go to is 49%. The highest, of course, we have done in the past is 35%. What is the tune of our investments? It is between 100,000 euros to 500,000 euros. On average, we have been doing about 300,000 euros. And how it is tuned is that we factor in all elements of business growth. 70% of the money we talk of going to capex, that is anything of capital nature. May it be equipment, may it be putting up a facility, and 30% to one's working capital.
An idea is never unique. It's you as the personality and the driver of the business and your execution. And really what it comes down to is storytelling. And you have to tell that story to investors, to grant funders, to individuals from the public who are going to fund your business. And so as much as you have a business plan that you're going to present, have your own personal story at the center and know why you're in business and what's going to differentiate you from anyone else, because for sure there's other people in the market who are trying to do exactly the same as what you're trying to do, and you have to prove to everyone else out there why you are going to succeed.
So always be on top of your plan. There's a book I was reading the other day in a book club, and the challenge was every week, just set aside on your calendar 30 minutes. Just go sit by yourself and re-strategize your business and ask yourself, am I headed in the right direction? Am I doing the right thing? For me, that's a challenge I would want to leave you with. Make sure that you're on top of your business plan, you're on top of your strategy, so that that's what is guiding where you're going.
Doing things once over and over again is not, and probably not giving you the results. Doesn't mean that you lose your focus. You start doing, if you are selling mangoes, you start now selling avocados, French beans. No. Be consistent. And as long as you maintain discipline and consistency, you will even be applauded by investors, by financiers to scale your business.
That is a very, very wonderful interaction with our entrepreneurs and our business partners. We have taken in the wisdom of investment, and we're hoping that these businesses come next year will be able to evaluate. Good thing is some of our investment partners have also invested over 300,000 euros in some of our TBN businesses. And therefore, let's get doing what we have talked about, and let's get this show on the road. Thank you.
I'm called Dr. Gonsha Rehema. I work with Extra Care Pharmacy, and I work as the director and CEO at the same time. of extra care pharmacies in Uganda. About TBN, I came to know about TBN in a WhatsApp group. Somebody posted the flyer. I followed up and called the numbers of the flyer, and that's when I got directions of how to apply for the program. So I applied and started the lectures when they started. We used to study once a week, and then we would be given homework, which we would do the whole of the week, and then after that, we would hand in, and then they would continue teaching us. So we did the program for 6 months, and today has been our graduation. I'm just so happy and excited about that. So we did the program for 6 months. Every week they would bring a facilitator. And what I liked about these particular facilitators is that they are facilitators that seemed like they are also doing businesses. They would handle and tackle challenges in a very experienced manner. What I liked about the program is that they took up only medical people this time, and all solutions and training was tailored around medical institutions, and it was very, very relevant. I encourage people to enroll, especially medical people, enroll so that you get additional information that you can use to grow your company and sort of increase your scope of knowledge, so that you're not only, so that you don't only remain with medical knowledge, but have other aspects of knowledge that will help you to manage your company better. Thank you very much.
My name is Dennis Ongora from Gender Enterprises. I'm so happy about the initiative and the program that has been brought forward by TBN. I love TBN because of the program design that they have. How did I benefit from TBN? You know, before getting the training from TBN, I used to know that my problem was money for my business. And of course, my business was not doing well. But when I got the training from TBN, one of the things that stood out from TBN was that it helped me to be creative. When I had a lot of challenges due to COVID issue, that the COVID-19 lockdown, I had to design another strategy of helping my business to grow. So that design of the strategy, I got it because of the training I received from TBN. Otherwise, without the TBN training, by now my business would have even collapsed. But I'm so happy for the program design of the TBN, and I want to encourage everyone, if you're in the business, please join TBN.
My name is Dr. Ope Jimmy. I am the proprietor and the medical director of Pure Medical Center. This is found in Gulu City, northern Uganda. We have had a long training with TBN, and TBN actually empowered us to handle our human resource, handle our capital, and was able for us to modify the way we run our facility. Through TBN, we are able to have appropriate way of recruitment, and the staffs are comfortable, and we have changed the lifestyle of handling our businesses within the facility. And we hope that through this TBN, we will do more things to help our clients within our region. And actually encourage people to join TBN so that they can get appropriate training, which include issues with capital, human resource, and even the interest in doing further businesses. There are so many other opportunities you can get when you have this knowledge, and you can apply for the well-being of our people within the community and also for our nation. Thank you very much.
My name is Mulumba Matthias Suna. I am the CEO of a company called SEPAD. SEPAD is Center for Participatory Research and Development. We hail from the background of research. We have over 15 years experience, ground working through innovative research, especially about businesses. We learned so many things in TBN, but when I went back home, I reflected about issues to do with innovations, like increased knowledge and capacity to do innovations. I have, for now, built one of the best and most efficient businesses in Africa, and we call it Africa Development digital platform. It's a platform where bringing together all business people, entrepreneurs, and especially focusing on the youth. But as you know from the background of research and intellect, we are focusing on sustainable development goals. We are proud to have been part of very many forums globally, but also at African level through African Union, and also at international levels where we have participated, and we are recruiting as many people as possible to the platform. The digital platform starts as a small WhatsApp group, then it goes into the Telegram. Then we are now developing a website. This website, we've already got companies in Africa, but also beyond Africa, but also today, as I came to recruit the alumni of TBN to start selling on the platform. This is a business that you cannot exhaust. This is a business not for one person. All of us can benefit from it. We have gone from analog to digital business now. I recently visited China and visited Alibaba offices. I got a chance to talk to the CEOs in the Alibaba business. They told me that they do business, they always have more demand than supply. People will order for a product like a shoe, a certain specific type of shoe, and they will go to all industries globally, exhaust all the production, and they will have more demand. You at the back of your house can be selling your products. You can be getting more customers without paying rent, but more customers and therefore doing better business. So digital business, online business is the way to go. And as SEPAD spearheading this in Africa, we are happy to have recruited Africans and young people from all over the globe. And probably one of our most interesting events will be towards December. We are great to go to Zanzibar, and each of the partners who have gotten on the platform, we shall go discuss and also enjoy our money. We need to enjoy our money, we need to enjoy our businesses, we need to make profits, and also feel good, not stressed at all times. I'm happy with TBN, and thank you so much, TBN.
Thank you very much for being here. It's been great having you all. Have a wonderful afternoon and rest of your day. Goodbye.
TBN is really about three things. We are about capacity building, We are about community and then capital raising. So we take our entrepreneurs through a 6 months program, and our promise to them is that if your biggest requirement is capital, we'll actually raise it for you. But beyond raising the capital, beyond the training, we also think belonging to a bigger community of entrepreneurs, values-driven entrepreneurs, is really important, because we've seen collaborations come out of that. We have seen businesses influence each other for good.
Each one of you is here today because at a certain point, whether it was Manraj or Purity or myself or someone else, somebody said something to you and it resonated with where you are. That's the unique value proposition, because there's anywhere else you could have been, but you connected here because it resonated with you. Look into your background and look at the kind of clients that you've served so far. Look at the kind of business that you've done this far. When you look in detail, you'll begin to identify certain unique things that only you can supply. That's your unfair advantage.
So they went through the 6-month program we call Business Continuity and Recovery a few months back. And so we just want to celebrate them like that.
It's a very good program, especially for someone who is also looking into funding, because then it prepares you to be ready for the people who may want to invest in your business, because they help you to come up with the processes, and that's one of the things I've also enjoyed a lot in the program. We've been able to actually document all our processes. We now have standard operating procedures. We're doing financial audits, and these are some of the things for someone who is looking at scaling up that even investors would want to see. And so it's a great opportunity, even joining the TBN program and being able to be ready to scale up.
Yes, so someone who's looking to have a strong business or scale their business, they need to join a program like TBN so that they can get mentorship and business skills. And I would also advise them to look into their finances, that's the cash flows and the revenues. And the good thing is TBN gives us all these resources in form of the classes, and it gives you materials that you can actually use in your business for you to be able to see if it's the right time to scale your business, and if it is, how to go about it. So I would advise them to join TBN for that.
Through the coaching, I was able to set up a place where now we're able to stock, and this has helped to reduce our turnaround time for our services, which means our clients are more satisfied. But these are all things probably I didn't think were important, but through the coaching sessions I've been able to do that.
TBN gave me a roadmap. I never feel lost anymore. Gave me a family, a sense of belonging. So I built my capacity, and that motivated me. Then at TBN, we have a very good support system. The TBN team is available for any consultation at whatever time. And they have the goodwill. They want nothing but the best for our businesses. That makes me feel very good that I came to TBN.
We took it in 2017. And at that point, we were at a place where we felt we really need to add proper structures in the way the company operates. And really that was the objective behind joining TBN.
The experience has been exceptional. So far, the experience has been exceptional. Mind-opening, and just like the name suggests, transformational. And honestly speaking, for me, it has actually been, my experience has been nothing short of transformational, bordering on a miracle, just there.
You see, the good thing about joining a program like this, you're learning from people who are experts in the area. Number two, you're also learning from your peers, because they're also talking about their own challenges, what's working, what's not. And then so there's that sharing. And then there's also just realizing that you're not alone with all your problems. Everybody else is probably going through the same thing with you. So it helps you as an entrepreneur to just have the grit to continue, because entrepreneurship is very difficult.
It's amazing how entrepreneurs will share ideas and share opportunities with each other. And we've seen that not just for this graduating class, but for the community, the alumni community. We have an alumni community of over 200 entrepreneurs, and we've seen so much collaboration come out of that. And that for us is what TBN is about, that we are creating a community of values-based entrepreneurs that are passionate about using business for good, that are using business to change the fortunes of our country and our continent.
The way the wise Chinese proverb says that the best time to plant a tree was yesterday, the next best time is today. So anyone who is thinking about doing it, just do it. It's absolutely worth it. It's absolutely worthwhile. It's a need for any business. This is a booster shot. And we know about shots. Yeah, this is a very good booster shot. I'd highly recommend it to anyone to do it now.